Today's date is January 29th. This is a Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. US stocks are mixed to start the day off. European shares are mostly higher with a few little declines. We are seeing US yields move lower with the 10-year down a little bit over 2 basis points on the day. And it is Fed day. It is Bank of Canada day. The Bank of Canada is expected to cut rates by 25 basis points. The Fed is expected to keep rates unchanged at their meeting. So let's take a look at the technicals that are driving the three major currency pairs in trading today. Let's get started. Let's start by taking a look at the euro versus US dollar on the hourly chart. In trading yesterday, the price fell sharply in the early hours of the trade, with the US dollar moving higher on tariff chatter from from the U.S. President Trump and also his Treasury Secretary Bessent. But then markets really started to waffle up and down. The good news for the sellers is that the price was able to stay below the 100-hour moving average that was broken on the sharp move to the downside here, and also this swing area. The swing area we've been looking at as a key level for a key barometer for bullish above, bearish below. As you can see, we moved above it in trading earlier, or last week, I guess, and the price moved back down to test the low before moving to the upside. On Monday's trade, we came down into the area, found support buyers, moved up to this swing area up through here, finding willing sellers and trading yesterday. We fell below that level, came back into the level, found willing sellers and pushed to the downside. So this area right here remains as key resistance on the top side going forward. But since then, the price has moved lower still, and has broken now below the 200-hour moving average and the 50% retracement of the move down from the December high to the low price that we saw in January. That 50% comes in at 1.04028 and is a level that is of importance for traders here today. So this is going to be close resistance in trading here today between 1.0402 and 1.04097. Break above that level, and although there's a swing area through here which is of concern, why? Because we have different highs through here, here is pretty decent ceiling, and then we broke above it and then used the level as a high and a low right here. So it is worth something. This is going to be a resistance level, and as is this area right through here. But if we do move above these levels, that's going to be more bearish, but stay below, and the sellers remain more in control. We'll look toward the low price that we saw in from last Thursday's trade, and then we'll look down toward the broken 38.2% retracement in this swing area down through here between 1.0332 and 1.0343. So that's a progression in the euro versus US dollar. Obviously, the sellers are taking more control below the 50% retracement level. By the way, the 50% retracement level also corresponds on the daily chart with the 50% retracement level of the move up from the 2022 low to the 2023 high. That 50% retracement comes in at 1.04053 or 0.53, which is just 3 pips away from the 50% retracement on the hourly chart. So interesting dynamic, but obviously a key level for traders, so pay attention to that. Let's take a look at the dollar versus yen. And this currency pair is down a little after moving down further than a little. So it kind of bucked the dollar moving higher trend in trading here today. But on the downside, what do? We found support buyers against our key support area. That key support area is defined by this swing area right here. You could see the number of different times that the market came down to this area and found willing buyers, all these levels right through here. And then we fell below it in trading on Monday's trade, but we could not sustain the momentum, and we started to rotate back to the upside in trading yesterday off those tariff talks. In trading yesterday, we came down to the high of that level, and also the 38.2% retracement of the move up from the December low to the high price that we saw in January. But we found early buyers against that level push higher. Admittedly, the price did extend above the 100 and 200-hour moving averages here briefly in the Asian session, but down goes for Asia, and the price moved down, moved back below those levels and started to move back down toward the 38.2, toward the swing area right here. This obviously is going to be our key area in trading on the downside going forward. If we stay above it, it's more bullish. If we move below, it's more bearish for the dollar versus yen. Conversely, if the price were to now move above this 100-hour moving average, get back above the 200-hour moving average, then the bias shifts more to the upside, and we start to look toward this swing area, get above that level, and we start to look toward the high prices that we saw in trading last week, which peaked at the 156.73 level. So sellers had their shot. Net buyers came in against support. We're now back toward the moving average resistance levels defined by at 155.51 and 155.71 for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And like the dollar versus yen, this had a little false move to the upside here that broke above both the 50% retracement, the move down from this December high to the January low, and also the falling 200 bar moving average on the 4-hour chart. Yesterday we fell below that 200 bar moving average and found willing sellers against it, but we did move a little bit above it, as you can see right here, also above the 50%, but quickly faded and started to rotate back to the downside with the dollar buying. And the price is now below the 100-hour moving average and trying to stay below that level at 1.2429. We'll watch 50%. We'll watch the 200-bar moving average on the 4-hour chart up here as the other resistance levels to stay below to keep the sellers in play. On the downside, if this level holds right here and we start to rotate to the downside, the 38.2% retracement in this swing area right through here will be the next target on the downside for this pair. It's defined by all these different levels right here before the price moved higher. We also have the 200-hour moving average coming into that low of that swing area. That area all comes in between 1.23515 and 1.23759. The 38.2% retracement of that move down comes in at 1.23689. Get below this area right here, and the door opens for further downside pressure for the sterling versus US dollar. So there you have it, a look at the three major currency pairs from a technical perspective to kickstart your U.S. trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.